Hey, it's Mac with PriceActionTradingSystem.com. It is Wednesday. It's September 26th. This will be our chart lesson for today, and not a lot of trades today. Basically, this was a FOMC day, so you had to be a little concerned about. You had to be flat really by noontime at the latest. So really from noon, really the volatility was still going pretty strong until maybe right in here when we started working our way back down. And notice here that even though there was a news announcement that the price action still held true. Um, we had what looked like a spike in channel. It turns out I really think there was a two-tiered channel here, just with this little overshoot here early on. But this is the way I was looking at it, and I really just had it as a spike in channel. But when it moved up, you just go an equal distance, and guess what? That's exactly where it turns down. So, um, but notice we're moving up. We get a break, two legs up to a new high, and it reversed. Perfect price action today, really. And this was not a very hard channel to find. This was pretty obvious. It was bouncing across here, and it was pretty obvious this was the highs early on until we pushed higher. So again, you just want to stay out during this time. You want to be out about an hour before because you don't want to get stuck in this. A lot of times it'll just go sideways real tight like this, and you'll get stuck in it, and then you'll have to exit because the news is coming out, and if you don't exit because of the news, you'll get whipsawed. So you got to play it smart and be flat about an hour. Don't enter a new trade after about noontime. If noontime Central Time, assuming that the news comes out around 1 p.m. So just keep that in mind. So it won't take long today. Not a lot of trades. When I came in, had been going sideways. When I came in, prices were working down. And we had a little breakout pullback short here. But more than anything, this is like a little reversal pattern. You've got you're moving down, you push through the EMA, you pull back, you get it turn back down, get a very bearish bar. Plus, it's right off that trend line. Make this a little bit bigger, and so that's a great place to go short. Quick, easy move. And then we get a failed second entry short here, but right here you're working sideways and you got a lot of stems on both sides, almost a doji here. So even though that's a failed second entry short with everything still below the EMA and all that sideways action, I would skip that. But notice that you can draw your trend line off those first two swings. So when it pushes up and turns down and fails again and gives you that bullish bar, I like going long then. Um, You had a couple of extra ticks there as well. I mean, it didn't continue on, unfortunately, but it was an easy scalp, and you had a couple of extra ticks to spare. And then, of course, it drops down, and so at that point, I'd be looking for a measured leg, which I'd measure it this way, and you can see that puts you down right about here. But I'd also measure this last piece of it and look for a possible right there. Either way, we come up slightly short. So we are a little bit away from the EMA here. And this is very tempting, but I'd probably skip that trade. You need a higher low, and of course we don't get one till way up here. So notice we're moving up, and you get a first entry short, you move up, and you got this resistance here, and you get a little breakout pullback, but it's also a failed second entry short. Nice bullish bar, breakout pullback. I like going long there. And again, it takes off. You probably wouldn't have got a long-term runner because it comes back again here. And now it confirms this trend line working up through there. It's a third touch. It's a second entry long right at the key entry point. I like entering there. Another quick move. And once we got up here and started backing up again, I probably would have exited this if I had any runners going there. There is a little bit of a higher low there. It's right back into the high. You might consider that one. I didn't mark it. I don't think it's a great trade. It probably should at least be green. I'll mark it green, but I'm just not crazy about it. Um, it's right back into those highs, as I said, and But if this is a spiking channel, which is what I thought this was at that point, you still got room to go, so you might consider it. But notice we turn back down. Actually, that gets you into the 12 o'clock hour. I wouldn't take anything new during here, and really on up into here, to be honest with you, because it's still pretty volatile at that point. So, but then it starts kind of working back down, and it did go a perfect measured move, so it looks like it's two tiers to this thing. Comes back down, it shoots through the EMA, pulls back to test it, gives you a much lower high here. This is really your signal bar, but this is a really bearish bar right at the key entry point. You may take that trade looking for prices to come back down here. And it's possible we could get a reversal because we did have a break and two legs up. But at the very least, I would look for prices to come back to here. So you may enter there one tick below that, but your stop still has to go above this green bar right here, up here. And then, of course, now you get a failed second entry long. It actually pushes through, pulls back, gives you a failed second entry long right off that key entry point. I like going short there. And then, of course, this was a nice move. Again, the bottom kind of falls out of it. And that got you into the 2 o'clock hour. There's actually a second entry short right there, right at the 2 o'clock hour, but it's too bullish, and there's a little bit of sideways action there. You're not, even though it is off the key entry point, I'd want a better signal bar. This one looks pretty good, but now you got a double bottom, and you did get an overshoot here. So, and there's possible close outside here as well. So I'd be a little leery about going short there. It does end up working down, but needless to say, and on into the afternoon when we reopened, we moved back lower some more. So it was a pretty good trading day. Not a lot of trades because of the FOMC stuff. And this is just not worth trying to trade. I mean, if you'd have traded this, if it was going slow enough you could trade it, you could trade it, because notice you got the break, you move up, comes back, it bounces right off the key entry point. And notice there's a little trap right here. And notice that that's a new swing low. So a first entry, second entry, you could treat that like a failed second entry short. So the price action still worked, but it's just wise to stay out of it. So that's the reason I don't mark anything. But I thought I'd talk about that because that is that would have been a nice setup on a regular day. And once you've got this measured move up here, I didn't put this on there, but there is a trend line. That's your break and move to a new high. There's two legs up, so really small bearish bar up here, measured move. You might consider, if you want to be aggressive, going short there. And you might have considered that anyway. But again, we still got some volatility going on, so I'd probably be a little bit leery about getting into that. So, but yeah, considering the type, with FOMC and there was actually a crude oil report. But crude oil has been it hadn't made much of a difference lately, and I wouldn't think that I wouldn't say that it probably made any volatile changes to the market today. We kind of spiked up a little bit here, but we were already heading higher, working that trend line anyway. So, but anyway, I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. Hope you had a good day. I'm done though for today. This is Mac with PriceActionTradingSystem.com. And we'll see you next time.